a.m. in New York City. Good morning. I'm Vance Quinn with your Bloomberg Brief. Here's what you need to know. Got legs? The metals rally, precious and base, continues unabated. Futures lower with risk events on deck today. Bank earnings then continue. Bank of America, Wells Fargo and Citi set to report after JP Morgan's surprise drop in investment banking fees. And another SCOTUS opinion day. A potential ruling on tariffs could test markets. So we are seeing futures pointed lower. We had small declines yesterday on the Nasdaq 100 and the S&P 500, about 0.2% apiece. That said, the stocks hit another record. It's all on semiconductor stocks, though it is not on software stocks, which are missing out on this rally. The Russell 2000 has outperformed the S&P 500 for 8 straight sessions now, and futures on the Russell are going the opposite direction today. Let's take a look at the bond market, because we are seeing historic low volatility in these bond markets. Down another basis point on the 30-year yield today, back to 482.12. Looks to be a little bit calmer in the middle part of the curve as well, and we have not moved at all really on the 2-year side of things. So really, with all these risk events on deck, the bond market is certainly appearing very calm. Let's take a look at metals though, because it could be an historic day for metals. We're seeing continued rallies across the board. The gold above $4,600 an ounce, silver above $90, although MLive points out that there is funds coming out of funds within silver that primarily the dominant force in those funds and perhaps rotating into gold. We're seeing copper higher. We're seeing base metals like tin as well, also potentially setting records once again today. And Bitcoin was back above $96,000 a coin overnight. All right, lots to parse. First, though, let's get to some individual movers over to London and Chloe Melly. Chloe.
Good morning, Bonnie. As you mentioned, it is another great day to be a miner. We've got gold, silver, copper, tin, all of those hitting record highs. And that is as investors are betting on more U.S. rate cuts. And we've got, of course, those geopolitical tensions really driving those rally in metals. And this is reflected in some positive movements in pre-market trading across that mining sector, with Barrick Mining and Newmont moving higher, as well as Pan American and Equinox this morning. Moving on to Trip.com, which is not having as good of a day today. It is down almost 10% in pre-market trading after it was announced that it is being investigated in China for antitrust conduct, and it has allegedly abused its market position. This is a probe that has sent shares lower in Hong Kong trading, and it seems like we are going to have a similar move in the US today. And finally, Rivian Automotive is also on the move today after being downgraded by UBS to a sell rating. The analysts have said that it's a company that is very prone to sentiment swings in the market, and that perhaps the expectations for its R2 model are a little bit too high, and therefore this downgrade is sending the shares lower today, down a little over 3% for Rivian.
Chloe, thank you so much. We'll keep an eye on those stocks throughout the day. Chloe Melly there. Coming up this hour, we're going to catch up with Amy Wu Silverman of RBC Capital Markets. She has a 2026 volatility outlook, and you don't want to miss what's in it. Big bank earnings continuing today, with Bank of America, Citi and Wells Fargo reporting before the opening bell. Joining us now is Bloomberg's Charlie Wells. Charlie, what do we learn from JP Morgan's results yesterday that might give us some indication of what we'll hear today?
Well, Vana, we learned yesterday that sometimes it can be disappointing to be a big bank because you make billions of dollars only to see your shares fall and see the broader industry fall with it. And that really is what happened on this earnings report out of America's largest bank yesterday. So we saw a pretty mixed report. We saw some strength on the trading front. We saw some strength across equities trading, across FICC trading. But what the market really seemed to focus in on was a miss on investment banking, particularly debt underwriting. So there was a drop in the fourth quarter of over 2%. Analysts had been expecting growth of 19%. So a discrepancy there that sent some chills throughout the market. We saw that in JP Morgan shares, but also in other shares across the big banks that we'll be reporting later today.
Yeah, but it was a timing issue in some ways, right, Charlie? I mean, we'll see what we didn't see in the fourth quarter in the first quarter of this year. Was it perhaps that, but also maybe the idea that there could be a cap on interest rates?
That's exactly right. So, I mean, some of this was a calendar issue that some deals, closed or were supposed to close in that fourth quarter, but actually may close in 2026. But, Jeremy Barnum, the CFO of JP Morgan, addressing that issue on a call after those reports came out, but also saying that in some ways this was the bank, that they need to do better. There also are some issues about interest rates and also questions just about this banking rally and how in this environment, in this rate environment, in this regulatory environment, can it continue? Because banks since the Trump election really have been, following a lot of optimism. There has been a lot of kind of constructive commentary on regulation, on capital requirements, but some questions in recent days. How good could things get? How bad could things get? Particularly because we're hearing some more heated rhetoric on the banking front come out of the White House as Trump finds himself vulnerable on this issue of affordability.
Exactly. Well, speaking of the administration, I mean, there has been a lot of criticism following the DOJ's probe into the Fed. And Jamie Dimon was asked the question and he didn't demur. He actually gave an answer.
He certainly did not demur. He was diplomatic but very direct, talking about this probe and basically saying that everyone he knows favors Fed independence and really kind of addressing this issue of the DOJ probe by the Trump administration. Well, as you might expect, Donald Trump chimed in on Dimon's comments. Let's take a listen to what those were now.
I think it's fine what I'm doing. We have a bad Fed person. He was extended by Biden, and yeah, I think he's wrong. I think it's wrong. He's done a bad job. We should have lower rates. Jamie Dimon probably wants higher rates. Maybe he makes more money that way.
So that is Donald Trump slamming these comments on the DOJ probe by Jamie Dimon. The question going forward is, how comfortable will other bank executives be commenting on this probe? That is what we're going to be watching today.
Well, we're going to get some in the next hour and then beyond as well. Charlie, thank you so much. That is Bloomberg's Charlie Wells all over the big banks. Well, from Wall Street to Washington, the U.S. Supreme Court has its second decision day today. It's another opportunity for the court to rule on the legality of President Trump's global tariffs. Bloomberg's Brendan Murray joins us with more. Brendan, what are the odds we'll get a decision today? How many decisions does the Supreme Court have to make this decision-making round?
Yeah, we don't really know. You got to put the odds at about 50-50, and the court doesn't release the agenda for its opinions in advance. So it's anybody's guess whether it's going to come today. They also have oral arguments today. So perhaps the agenda is quite full and we won't get a decision. But all eyes are going to be fixed on the bench at 10 a.m. in Washington to see if they do hand down this decision. President Trump was pulling no punches. He said that in his comments in Michigan yesterday that if you are anti-tariff, then you are pro-China. So he's really broadened out his use of tariffs, not only against America's trading partners, but also in the geopolitical realm, like we've seen with his 25% tariffs on the trading partners of Iran most recently this week.
For what it's worth, Polymarket is just under 30% odds of tariffs being upheld, and similar odds the Supreme Court will force Trump to refund the tariffs. I mean, it's Polymarket, right? So there's an incentive maybe to be contrarian or what have you. But what is the consensus? Are people thinking that the arguments against the tariffs might have actually worked?
Yeah, the Bloomberg intelligence number puts it at 60% that the president is going to lose this case. So there could be some sort of mixed decision where they allow the fentanyl tariffs falling under the sort of national emergency rationale for tariffs. Those tariffs are currently on China, Canada, and Mexico, while striking down the other broader tariffs on all the other trading partners. So there definitely seems to be a sense that based on the oral arguments that we heard back in December, that the justices, at least a majority, a small majority perhaps, we're leaning against the arguments the government was making back during the arguments, and that's how this next decision will be delivered. This supermajority, the super conservative majority, going against the president in a rare case, trying to restrain his authority.
The tariffs obviously having major impacts on other economies. So a BOE policymaker saying it's lowering UK inflation, for example. And then we got China trade surplus data. $1.2 trillion worth of a trade surplus last year, a huge size of surplus. But the US share of China's total exports was at an historic low of 11%. So where is it all coming from?
Yeah, exactly. So on one hand, you could say that the Trump administration's tariffs, especially those targeted at China, are doing what they expected they would do, and that is reduce the bilateral trade relationship in goods. That's definitely happening. But what we're seeing is in these numbers today is that those exports from China are going to places in the EU. They're coming to the UK. Though both of those economies saw their imports from China go up about 8 or 9%. And so China is finding other markets for the goods that are not going to the U.S. And so it remains the manufacturing hub of the world until the U.S., as Trump would hope, can try to reshore some manufacturing and create the sort of factory jobs that he promised in his campaign.
Yeah, it's really quite incredible. What's also incredible is that we're not getting that much movement on any kind of agreement with India, but we do know that Marco Rubio is holding talks with the foreign minister. Anything to expect?
Yeah, the India deal with the U.S. has been close for months now. It's one of those ones that the tariff on India imports into the U.S. is a very high 50%, and that's tied to India's purchases of Russian oil. So both sides want to get that done. India is notoriously a difficult country to negotiate with. They have a huge agricultural domestic constituency that they're trying to protect from the world market. So it's been a painstaking process between the U.S. government and India. They think they're close, but all trade deals are close until you get down to the final nitty-gritty details, which are really the hardest to get over the goal line.
Yeah, exactly. Brendan, thank you so much. Our trades are there in London. Brendan Murray. Now to other top stories trending on the terminal this morning. BP says it expects to take as much as $5 billion in write-downs for the fourth quarter from its energy transition business. This comes just weeks after replacing its CEO as it strives for a turnaround. The oil giant also flagged weak oil trading and flat production for the fourth quarter ahead of earnings next month. Sources tell Bloomberg that Netflix is working on revised terms for its Warner Brothers bid and has discussed making an all-cash offer for its studios and streaming businesses. The changes are designed to speed up a sale that could take months to close. The current offer includes a mix of cash and Netflix stock. And Chinese stocks reversed gains and are dropping after authorities tightened rules on margin financing, signaling unease over the pace of this rally. Under the new rule, investors must now provide margin equal to the full value of the securities they buy on credit. That's up from the previous 80% threshold. Coming up, the death toll in Iran is rising as the crackdown on protests continues. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The death toll in Iran's protests rising, with activist groups saying now more than 2,500 people have been killed. This as Tehran continues its crackdown, despite President Trump's threat to take action over mounting fatalities. Bloomberg's Patrick Sykes joins us now from Istanbul for more. Patrick, do we know if the regime is carrying out executions, or is this protesters being killed on the streets?
Hi, Vonnie. Yeah, the first kind of potential execution has come up just within the past day or so. It's a 26-year-old man who was arrested just over or less than a week ago. We understand there's reports that could happen as soon as today, which I think just goes to show, some of the fears around due process that protesters who've been arrested are likely to face. Interestingly, Trump did also mention, executions as another kind of turning point that he would be following in terms of how the US calibrates its response. But ultimately, it is still really hard to get information out of Iran. That internet blackout does remain in place. And the working assumption is that the regime forces are still putting down those pockets of unrest.
Yeah, and it seems that the regime is more concerned about showing force domestically. It seems less concerned about what the US might do if it's provoked more. But I'm curious, Is the crackdown proving any kind of deterrence? Are protesters letting up, or is there any way of knowing?
It is really hard to know, as you say. I think there was a sense as of yesterday that the numbers out on the streets had fallen off a little compared to the weekend in Iran being Thursday, Friday. But I think since then attention has really turned to the international picture, right? Just yesterday, things almost seemed slightly de-escalatory. Trump was talking about, potential talks with Iran and negotiations. The one concrete step on the table was tariffs. But then later that day, he talked about, he encouraged Iranians to get back out on the streets, to take over institutions, a really important part of the regime's kind of cohesion. And so that moved things back into escalatory territory. And today, regime officials doubling down on that rhetoric. For them, this is terrorism. It's instigated by the US and Israel. And they've vowed to show, zero mercy in how they deal with it through the judiciary.
Yeah, and if Iran has, domestic issues to deal with, can it really afford, foreign policy issues to deal with? So if the US decides to actually do something beyond tariffing, secondary trade countries and so on, if it actually, engages in some kind of strike or military maneuver of some kind, is Iran able to meet that?
So on the domestic side, Iran has faced protests before, and it's always been able to crack down with great violence in order to suppress them. What we are seeing, though, is that these are happening at increasing frequency. So if these are to fizzle out now, then the fear is that it will bubble up again in weeks, months, years to come. Internationally, though, that is still the wild card. Trump's threat of strikes remains in the air, and I think in the wake of the June war with Israel, backed by the US last June, officials in Iran are going to be taking that a lot more seriously. Yeah. They're also going to be calculating, of course, whether the US has that extra capacity vis-a-vis the Venezuela operation priorities to spare for Iran.
Patrick, we'll see what today brings. Thank you so much, Patrick Sykes in Istanbul. Now to Europe's Greenland challenge. Prime Minister Nielsen has categorically ruled out joining the US in a joint press conference with the Danish Prime Minister, while President Trump stands firm on his position.
Now we are faced with a geopolitical crisis, and if we have to choose between the United States and Denmark here and now, then we choose Denmark. We choose NATO, we choose the Kingdom of Denmark, we choose the European Union.
That's their problem. That's their problem. I disagree with them. I don't know who he is, don't know anything about him, but that's going to be a big problem for him.
The remarks coming ahead of a high-stakes meeting of Danish and Greenlandic foreign ministers with US Secretary of State Marco Rubio and Vice President J.D. Vance later today. Let's bring in Bloomberg's Copenhagen bureau chief, Sarah Scholen, for more. Sarah, Greenland obviously coming out now and categorically saying, look, we are at one with Denmark on this. We want to stay, a territory of Denmark, and we want really nothing to do with the United States. But President Trump didn't seem to even know who was speaking. I mean, it speaks a lot to the president's, ignorance on the issue.
Absolutely, and that's obviously something that's been pointed out a lot in Danish media today. As you can probably imagine, all the Danish news channels, they're focusing on this meeting. It is quite a high-stakes meeting, and when you hear something like that from President Trump, it makes the Danes and the Greenlanders really wonder, do you even know what kind of territory you're trying to take over if you don't know who the Prime Minister is? We're obviously seeing a lot of this as threats, but both the Greenlandic and the Danish foreign ministers that are going to Washington, they are going there as a united team to really try to diffuse these threats.
So they seem to think that there's a diplomatic solution. President Trump seems to think there's, a money solution, that anything can be bought. And we'll see what happens. But this is turning into a problem for NATO as well. How is Greenland, upping its relationship with NATO countries in order to try and stave off any kind of threat?
There's been for a while, the Greenlandic populations is really stressed. They're not Danish, they're not American, they don't want to become American, they're Greenlanders. But what we saw yesterday and what we've seen in the past few days is that the Greenlandic government is really throwing its weight behind being Danish, being part of NATO, talking of that relationship and really stressing to everyone, potential aggressors, that if an attack on Greenland will also be an attack on NATO because of the Danish membership of NATO and the security umbrella. So the Danish Prime Minister, Mette Frederiksen, is trying to cast this as not just a land grab by the US, but something that must be protected for international law and order to prevail, to protect smaller states. Denmark is a tiny country in the global context. Greenland an even smaller territory. So if you have a big superpower just coming in and grabbing that, where does that leave any other small state? And that's really the issue that the Danes and the Greenlanders are trying to drum up now.
All right, Sarah, thank you so much. Sarah Scholen there in Copenhagen. This is Bloomberg. Time now for your front page news. First up, the Washington Post leading with multiple senior prosecutors in Washington and Minnesota resigning amid turmoil over the Trump administration's handling of the shooting death of a Minneapolis woman. The Minnesota resignations follow demands from the DOJ to investigate the widow of the 37-year-old woman killed last week by an ICE officer. Next up, on the Wall Street Journal, President Trump criticizing a group of U.S. attorneys at a White House event, calling them weak and complaining they weren't moving fast enough to prosecute his favored targets. The Journal says the criticism came a day before federal prosecutors sent grand jury subpoenas to the Federal Reserve. And finally, the Financial Times reporting U.S. trading groups expanding into prediction markets. The FT says some of Wall Street's biggest names now vying to cash in on these markets, emboldened by the administration's light touch approach to regulation. Do stay with us. Amy Wu Silverman coming up next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Got legs? The metals rally. Precious and base continues unabated. Futures lower with risk events on deck. Bank earnings continue. Bank of America, Wells Fargo and Citi all set to report after JP Morgan's surprise drop in investment banking fees. And another SCOTUS opinion day. A potential ruling on tariffs could test markets. So we have futures pointed lower and losing some steam now, actually, after the S&P and the Nasdaq were both down about 0.2% yesterday. The Russell 2000 has also reversed course. It was higher earlier. We have seen the Russell 2000 see 8 straight days of outperformance to the S&P 500. We see a 9th we'll see today. The SOX index also did hit a record yesterday thanks to chips, far outperforming software. In terms of the bond market, not that much movement there. The long end coming down just a little bit, about 2 basis points now. We're below 483. All the action right now is in metals, in line for an historic day. We have silver above $90. We have gold above $4,600. Copper well above $13,000. Tin is soaring as well. And then the Bitcoin rally is back, it seems. Bitcoin at a 2-month high wiped out $600 million in bearish crypto bets overnight, with the coin now above $95,000 a coin. Let's get to some individual movers now this Wednesday morning. Here's Chloe Melly.
Good morning, Bonnie. It's a great day to be in the mining business, and we are seeing some green across the board there for miners this morning. We've got gold, silver, copper, tin, all of those hitting new records. Investors are betting on more rate cuts in the U.S., and then we've got geopolitical tensions and concerns around threats to the Fed's independence really driving as well that precious metals rally in particular, and therefore we are seeing all of those miners moving higher today, all of them in the green. On the flip side, this risk-off sentiment in the market, this rush towards safe havens, all of that is actually translating into a little bit of weakness for the Magnificent Seven this morning, with Meta in particular dragging the rest of those big tech peers and down about 0.7% this morning. And so we are seeing some red across the screen there for big tech. And finally, Trip.com is also having a little bit of a struggle this morning, down almost 10% because it is being investigated in China for antitrust conduct. It has allegedly abused its dominant market position, and we have seen already shares in Hong Kong trading edging much lower, and we are probably going to be seeing the same in US trading this morning.
Chloe, thank you so much. Chloe Melly there for us in London. After seeing what she called shadow hedging into the end of last year, RBC's Amy Wu Silverman has some predictions for the new year. She writes this in her 2026 volatility outlook. So, We'll see a YOLO, FOMO, MOMO options craze in an unexpected industry. There'll be opportunities to rent the rally in trades like small caps. It's going to be something shiny that's going to take out retail, not something scary. And gold continues as the hedge of choice. Amy is head of derivative strategy at RBC, and she joins us now. Just on the last one first, Amy, the metals rally that we're seeing right now, is that more indicative of the moment we're in and perhaps what's to come than, say, vol markets?
It certainly is. This is something we wrote about in the 4 predictions you just mentioned for volatility in 2026, Vonnie. And as it specifically relates to gold, the first question I get whenever there's any rise in geopolitical tension from investors is, what can I do about it? How can I play it? And when you look historically, especially in the last 5 years, the biggest knee-jerk reactions tend to be in flight to safety trades like gold. And we've seen far more dispersion on the index side in S&P, which has actually made gold and gold upside a better hedge than some of your S&P products right now.
Yeah, I mean, it's fascinating because our MLive team overnight was writing about how so much is actually coming out of silver-denominated funds at the moment and maybe going into gold. So gold does seem to be, as you say, the hedge of choice. But how much can that continue? And is it institutional investors that are using gold?
Yeah, it's a good part of it. And part of what's happened is you think about other areas that investors typically hedge. So just to give an example, some think about Bitcoin as your digital gold, but when you actually run the realized correlations, it's behaved much more like a risk-on asset. And then let's take something else like an S&P put or a VIX call, which investors also use to hedge. Because we've had this issue of so much concentration in the market, so linked to the AI trade, a lot of times the dispersion in the market essentially is masking index volatility on S&P as a good way to hedge. And so you've actually left investors with fewer options than they typically have. And I think that's one reason why, as we wrote in our outlook, when you see gold skew continue to invert, meaning that bid to gold calls, you actually can use it as a marker for the idea that there's probably more momentum and more upside rather than less coming.
So you made mention of it there, the VIX, it's around 16, has been for several days. Dan Curtis pointing out this morning that the MOVE index saw its 6th lowest close yesterday since 2021. I mean, are vol markets further out, maybe showing us more of what's scary underneath the surface? Is it just sort of prompt volatility that's calm?
Yeah, that's a great question. So I would say 2 things. The first is you're right. Term structure is steeper, and that just simply means that when you look at a comparison of near-term volatility relative to longer-term volatility, we have seen longer-term volatility buckets pick up because a lot of the geopolitical tensions, a lot of the issues that are there, they don't have a timeline, unfortunately, or it's something that can be can-kicked. So it makes it very difficult short-term for investors to monetize. But the second thing I would say is, you and I have talked about this idea that the market has been a little bit like a paddling duck, meaning you don't have very high headline VIXs. You still have the sub 20 VIX, but underneath the surface, you are getting those rotations. That was another pillar of our volatility outlook, which is, there is going to be this desire to rotate out of your AI names, out of your heavily concentrated names, and try to see if small cap or value or equal weighted S&P has more of a shot in 2026.
Yeah, that was fascinating, I thought. How are investors at the moment hedging policy credibility, right? Because we had the DOJ subpoenas, it moved markets a little bit, but they didn't go crazy. But then you had bank earnings disappointing, and banks, at least JP Morgan has been selling off for the last couple of days. And it wasn't just on the earnings, it was also on the idea of interest rate caps, credit card interest rate caps too.
Yeah, so I think for the last thing you spoke about in terms of financials, those you can do more sector and idiosyncratically. So, you can hedge JP Morgan specifically or use the KRE or XLF ETFs, especially if bank earnings go into full swing. But the second aspect, which is kind of just these longer term bubbling tensions in the market, I would say the market has become very inured to them. And there's a little bit of a degree of, look, I'm just going to ignore them until there's actually something happening. happening. And a lot of investors, when I question them further on why this is the case, they point to an example like Ukraine, where, of course, there's been this devastating human toll. But when you look at the market reaction, apart from kind of the knee-jerk reaction, Vonnie, that happened the first few weeks, it really hasn't made that much of a net impact in terms of hedges. And that's what investors have to be careful of, which is there are all these Fed independence questions, there are these geopolitical risks, but ultimately, does that impact the market or does that not? Because that's what you need to monetize those hedges.
Yeah, as you've been saying for months, that wait-and-see stance seems to be still in place. You mentioned that the retail demand will finally be taken out by something shiny, not by something scary. And this is something that's sort of been a foundation of this market. Every time we saw a drawdown, the retail investor came right back in to buy it. What will the shiny thing be? What do you mean by something shiny?
So this I put in as our prediction because it's kind of the question I get the most often, which is retail has constantly been stepping in and buying the dip. They won the round April 2nd with Liberation Day when investors on the institutional side panicked and sold. They stepped in. And so the question I constantly get from institutional investors is, look, what, if anything, makes retail stop being the support in the market? And so my answer was it could be something shinier, not something scarier. And the shiny thing could be prediction markets, which have grown. You've seen so much outsized growth there. It could be, more of a flurry into cryptocurrencies. And my point just being that when you look at retail investors, they're not regulated in the same way. They don't have to meet certain benchmark requirements, and they really have a little bit of this gambler's mentality, which if you think about prediction markets is, right up their alley. And so I think it's just going to be this mass of choices which could start to dilute the effect, not necessarily, some 3 to 5 standard deviation drawdown in the market.
Amy, wonderful to have you as always, and a fascinating set of predictions for the year. Amy Silverman there of RBC Capital Markets. Now to other top stories trending on the terminal this morning. BP says it expects to take as much as $5 billion in write-downs for the fourth quarter from its energy transition business. This comes just weeks after replacing its CEO as it strives for a turnaround. The oil giant also flagged weak oil trading and flat production for the fourth quarter ahead of its earnings release next month. Sources tell Bloomberg that Netflix is working on revised terms for its Warner Brothers bid and has discussed making an all-cash offer for its studios and streaming businesses. The changes are designed to speed up a sale that could take months to close. The current offer includes a mix of cash and Netflix stock. And Chinese stocks dropped after authorities tightened rules on margin financing, signaling unease over the pace of the rally. Under the new rule, investors must now provide margin equal to the full value of the securities they buy on credit. That's up from the previous 80% threshold. Coming up, the U.S. Supreme Court set for another opinion day on President Trump's tariffs. That's next. This is Bloomberg.
He's been a lousy Fed chairman. He was reappointed by Biden. I was a little surprised at that because I didn't think he really earned his stripes. He's been too high on interest rates, and I call him too late. He's too late to reduce. He should have reduced them by more. Despite that, we fought through that.
President Trump speaking to CBS on Fed Chair Powell after much criticism of the Justice Department's probe. The administration, though, standing firm. Joining us now from Washington is Kate Ackley of Bloomberg Government. It's fascinating, Kate. The president said he knew nothing about this originally, and now he's suggesting that, well, it's okay by him anyway, right? What's the thinking? What's the next step here?
Well, this does seem like it could complicate the confirmation process in the U.S. Senate for whether it's Kevin Hassett or the next person to take on this role that the administration would appoint. So we've seen already this week some backlash from sitting U.S. senators, including those like Senator Tom Tillis, who's on the Senate Banking Committee. So this certainly has riled up some of that situation looking ahead to confirmation of the next Fed chair.
It does appear, though, that Trump is not going to back down on this, and Jeanine Pirro is her own woman. She can continue to do as she wants. She's not going to get any pressure from Trump. Would that be the correct reading?
That seems to be the correct reading. I mean, they're saying let this process, run its course. And even some of the critics in the Senate have said, well, we if there's something to scrutinize there, then scrutinize it. But I think there's a very skeptical eye coming even from some Republicans in the Senate on this.
Kate, it is SCOTUS Opinion Day once again. SCOTUS could come out with any opinions that it has to make, but it could also come out with the tariff opinion. What are the other opinions on deck, and how likely is it that we actually do get the tariff opinion today?
Well, we were waiting on Friday, too. It was an opinion day on Friday where I think the tariff decision is the one right now that we're all sort of all eyes on that because, it could have serious ramifications for the administration's policy on trade and tariffs and some of these negotiations with other countries. So, but the Supreme Court doesn't say, here's what we're going to be releasing this morning. You get the boxes and then word spreads. And of course, everyone's going to have to digest what's in it. So even if we get the tariff decision, everyone's going to have to look through it. What does it mean? What is the reaction from President Trump, from others in the administration? There's just a ton of question marks, including, will we see that decision today?
Exactly, and what exact argument actually swayed the justices, and how many justices were for and against. It's going to be fascinating. Now, that's all domestic, but moving to the foreign theater, Trump saying he's going to make a decision on Iran soon, but as we know, the death toll has been jumping. Activist groups now saying it's above 2,500. Is there some kind of a bar or red line that we've noticed that causes President Trump to take some action?
Well, what he put out yesterday was saying, to the people who are protesting, just keep protesting. And he said something like, take down the names of the people who are doing the killings, and essentially that there would be some payback, and that he was, evaluating the situation and might, take action at some point. So it's still a very, very precarious situation, a lot of unknowns, and it's part of what we're seeing across the board this year with the Trump administration. We saw it in Venezuela. There's just, there's Greenland. There's a lot of unknowns and a lot of volatility that obviously the markets are watching, CEOs are watching. It's a very volatile time where you have a lot of people who operate here in Washington, the lobbyists who represent all these foreign governments and clients are really all eyes on this situation. Again, a big unknown.
Very combustible. Kate, thank you so much. Kate Ackley there of Bloomberg Government in Washington. Turning to earnings now, Citi, Wells Fargo and Bank of America slightly lower in the pre-market ahead of their results before the bell. Joining us now is Bloomberg's Charlie Wells. So JP Morgan came in, it blew away estimates by some metrics, and then, investment banking fees were down, Charlie, and the stock plummeted. What's foremost in investors' minds when it comes to today's bank earnings?
Well, Vonnie, I think it's any surprises like that. I think one thing that a lot of bullish analysts on the banking sector had worried going into this earnings season was that shares have really been on a roll over the past few months. Some have argued that they're potentially even priced near perfection. And so when you get that point, any little surprises that come through, little or maybe even not so little, come through really kind of have an outsized impact on the share price. And we seem to see that yesterday, as you mentioned, that JP Morgan report coming out mixed with, that miss on investment banking fees, but strong across the board on most other business lines. So I think we're going to look out today to see if that pattern continues here. Are there any surprises that kind of counter the narrative of strength in this industry?
Yeah, I mean, we'll be looking especially for debt underwriting, I suppose, after JP Morgan's comments yesterday. And I suppose any political comments. I mean, Jamie Dimon doesn't seem to mind weighing in on politics, but perhaps the others will be a little bit more reticent.
Vonnie, that's exactly right. So he did weigh in on that DOJ probe of Jerome Powell, just saying that, everyone he knows thinks that Fed independence is a good idea. What we also know about Jamie Dimon is that he is pretty comfortable, usually at one point during earnings season, weighing in on some hot button issue of the day. He is, of course, the CEO of the largest bank in the United States, has a lot to back him up there. I think a number of the other executives questions about that, at least on that DOJ probe. But when you look at some of the other measures that we've been hearing coming out of the White House about caps on interest rates for credit cards, about those interchange fees, it will be interesting to see how they communicate on that, because one telling change that we've seen this year is the White House, is the administration taking a different tone on the banking sector at a time when they feel vulnerable on this issue of affordability, of prices, of inflation that has continued to dog politicians on both sides of the aisle, but that cost the Republicans a number of seats in those elections back in November as we head into this midterm election year.
Yeah, and I mean, it's a balancing act, right? These CEOs and CFOs, they want to please their investors, but of course they don't want to, awake the ire of the administration in any way. So I guess without making any promises, they're going to have to promise to be behind this affordability push somehow.
That's exactly right. And, privately, what Bloomberg has reported is that a number of these banking CEOs, of these finance CEOs, are fuming, but they are going to need to navigate a White House that is certainly paying attention to what these comments are like. Some of our reporting has indicated that there could be some measures that these banks could take, some products that they could put to the market that would meet some of these demands coming from the White House. They are talking about that 10% interest rate cap. Well, perhaps banks could offer credit cards that offer 10% for a limited time. So this is the way that CEOs and executives in banking and in other industries are trying to figure out how to do that delicate dance of meeting investors, but also the White House.
Well, we'll see the numbers and the executive comments later today. Charlie Wells, thank you so much for joining. Saks Global Enterprises has filed for bankruptcy following growing losses and a substantial debt load. The owner of Saks Fifth Avenue, Bergdorf Goodman and Neiman Marcus has secured close to $1.8 billion in financing. For more, Andrea Felstead of Bloomberg Opinion joins us now. How did we get here, Andrea, and what happens next?
Well, the tale really goes back to that deal back in July 2024, I think, when Saks bought Neiman's with a lot of debt. It was supposed to create a luxury powerhouse, but that debt load really made it very difficult to pull that off. There were delays to paying suppliers, and they stopped shipping, so it had inventory shortfalls that affected sales, and it really all snowballed. And to add to the problems, the luxury sector experienced its own downturn. So it really was not great circumstances to deal with that level of debt.
Yeah, and I mean, as you say, timing plays such a huge role in, the lives of retail and retailers. I mean, what's your best guess? Does Saks emerge from this somehow a healthier company?
I think it does emerge. It emerges much smaller, hopefully with fewer liabilities. It's put in place what seems to be an experienced management team to try and really rebuild those relationships with suppliers. I think the wild card is really, does anybody come in for some of its assets, particularly, the operations of Bergdorf Goodman.
Oh, wow. It's going to be fascinating to watch. Andrea, thank you so much. We'll be reading your columns. Andrea Felstead of Bloomberg Opinion. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. So we get bank earnings continuing. Bank of America, Wells Fargo and Citi all reporting before the opening bell. Then data, PPI and retail sales at 8:30 Eastern. And the Supreme Court set for another opinion day. We could get an opinion on President Trump's tariff policies. So, in the pre-market, cybersecurity stocks slipping now as Reuters reports that China is banning the use of some US and Israeli cybersecurity software. So, keep an eye on these stocks and all of those stocks that are in the cybersecurity space, Israeli stocks as well that trade in the United States. And then this is your macro picture. Let's start with metals because it's just green all the way. So copper is just coming off a little bit, but silver is above 90 and MLive says it could head for 100 before it tails off. Gold above 4,600, Bitcoin at 95,000. And then you do have futures pointed lower and bonds really not doing much of anything. Well, that's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.